Hello, hello. How be everyone doing? What is occurring? Hope you guys had a good day. Hope it was better than mine. We'll wait till people jump on before we see what's happening. I'm trying to be super positive today, you know. Hope everyone's trading day was good. Let me know how it's been, and I'll get into how much of an absolutely fantastic day I've had. But another pretty lackluster day today. Well, in ES at least. So, has anyone taken any trades? How's your day been? What's been happening? Is the sun shining? Everyone's still kicking? You're trading SimTP. I wish I traded Sim today. I get fucking hosed today. I think I had one decent trade, and then um Simnaz. Okay, well at least you didn't lose then, which is good, buddy. I just had one of those days today where no matter I sold them, get hit with a reload buyer, bought them, hit with a reload seller. Um, just a really difficult day on treasuries, to be honest. It was just not really any pullbacks, not extremely trendy either. Um, Consolidated around prices a lot. Yeah, it was a shit day. I like your style, buddy. I like your style. And to be honest with you, I say this every day, and it doesn't matter how long you've been trading for. Being okay with losing is the key. Hello Neil, how's it going, dude? How's your trading been today? Hopefully someone's had a profitable day, or at least put some sort of green on the table today. But I would say you almost need to work backwards. You need to work on a risk management strategy first, and get a sample size for your trades first. Trader boy, red, yep. Wonder if anyone's had a green day today. Trading went well, only one trade. Nice, Neil. At least you had a good day. At least you had a good day. Yeah, that's good, dude. I not too pleased with my behavior today. Trading. I would say, reflecting on my session, um, just didn't really execute well. got a bit stubborn, and the action was shit as well, to be honest. Actually, let me open it and we can run through. Let me open it and we can run through the type of action. Okay, so I'm going to open up the profile so we can do the recap of what I was expecting, right? So this is the tens. I'm going to do this because this is what I was trading today, right? But it's typically what I look for, in any market before I look to sort of jump in, right? So this is the 30 minute bars. I'm not really too, massively bothered about what it's displayed in. I'm just really looking to see where it's value. So yesterday we probed the high up here. This is the 30 year, this is the 10 year. They're really correlated. It's the two main markets that I trade. So yesterday we were extremely out of value just before open. There was not really any major data points that came out yesterday. And then we just absolutely dumped, and then we sort of consolidated round about these parts, hit the highs, and the overnight session we did the same. We just absolutely dumped, you know. And I'm sitting here thinking to myself, right, there's not really any data points today. There's new home sales and stuff coming out, but that's not really going to have a major effect. I think the sentiment of the couple of speakers in the last 2 days, with them saying that they're not really planning on cutting now, has really had a negative effect in treasuries, because yields are then going to stay higher, which ultimately has an inverse effect on futures, right? But nonetheless, I'm still thinking, okay, um, this is still out of value. This was the previous week, okay? So is this down here? Um, and I'm thinking, right, so I wasn't buying here at all. I started to buy down here because I'm thinking, right, we're going to at least have a little bit of a bounce, and we just did nothing the whole day, And also, to top it off, which is extremely annoying, the 30 year has been, look at the absorption on the 30 year, and then look at the amount of selling in the tens. So clearly they're absorbing the long end of the curve, selling the middle, and selling the short end, right? And you maybe look at this and you're maybe thinking, oh, Lauren, why did you not just sell? So when I hopped into the market and had a look at things round about, it was, what time would that have been? It was about 7:30, 8:30 in the morning US time. Okay, so I had a rough look and I was looking really to get long to try and go back up into this sort of range up here, because I still didn't think that we're going to go and correct these single areas here on this session, right? Because we're normally going to need some sort of news or catalyst to go down into this range, right? So then let's go across. I set this up for the stream yesterday, and I've just saved it. So let me open up the DOMs, okay? So my overnight session. So my session begin is 8:30 US time. I just run it to the same as close. It actually closes an hour before, but I just run it to close anyway. Um, and any time between that is overnight session. So if we have a look at this, this was the previous week's. This is the previous week's volume profile as well as today. So we've basically just dumped. But as you can see, that they've dumped and then they've essentially traded out an area. This was before market open, before bond open. Then we cracked this a little bit, and then we've just really, done absolutely nothing for today. And the same on the tens. Really shitty price action today. Um, in hindsight, we did. I was expecting us to go and we're up here. I was expecting us to try and break this step in the profile here, and go back up into value. That was my reads, and I was wrong, to be honest. Was wrong on my reads. Um, we've just extended the low again and then back into this point of control. So in theory, I potentially should have sold this back down for a probe of the lows. Um, but this is one of the downside of treasuries, to be honest, in my opinion. Um, is it's another one for the stats in the journal where when treasuries is pretty overextended on a day, it doesn't normally it doesn't normally go back. To be honest with you, it's not as whippy as indices. To be honest, um, so I think been a little bit optimistic to step in the profile, break VWAP, and go back into value. And then of course I traded like a dick and got pretty stubborn. When I was long here and I was up four ticks or something, I then let that go back for one tick. Then we went down, absorbed some. Then went up again. I bought, took another stop, bought the lows, took another stop. Just traded like a dick, to be honest with you. When ultimately, I just should have recognised that there was not really any action here. And it's easy to do in hindsight after the dust has settled after a bad day. So these things happen, you know. I just thought it would be I thought it'd be worth talking to you guys about it. We all have these days. Doesn't matter how long you've been trading. Um, doesn't matter how long you've been trading, man. We all have them. So yeah, that's pretty much it. And the same as ES. ES has pretty been lackluster today as well. We've just probed the high a little bit, reversed back in. Not really any meaningful range as well. Well, that's exactly what I was saying to you the other day as well, Neil. You need to focus on some key times, and then if you don't see it that day, you just chalk up the day. To be honest with you, but that's hard to do. I would recommend that you have either a loss limit, a tick limit, or a consecutive losing trade limit. Probably a hybrid of the three. To be honest with you, I don't think it's great to have an actual dollar amount because then you end up just trading your P&L. Depends how you are as a person. It may be better to go for a point or tick limit as maybe as a consecutive amount of trades in a row lost. It depends on what your stats are. If you're a 60-70% win rate, you probably won't lose three trades in a session without trading like a knob. So all these things. No, no problem, man. I'm here to let you guys know it's hard, to be honest. Never gets, and this is the thing. Like, if you don't fucking keep yourself in check, right? Tomorrow's your last day. It doesn't matter if you've been doing this for 1 year or 10 years. As soon as you start getting overconfident and your ego gets in the way, right? And not saying everyone's got an ego, but you kind of need to have a bit of one in order to think that you can step up every day and take money from people, right? You need to have some self confidence in you and believe in yourself. And sadly, sometimes a bit of, depending on your personality, you get a bit stubborn. You probably take too many cracks at something. All these types of things. But again, when these days do happen, you just need to control them and shrug it off, and the next day, come back. And I think over time, what you need to do is recognize when you're just not doing well in a day and try not to lose as much money on those days, because honestly, when your read is wrong in the day, it's there's no chance you're making money. Do you know what I mean? Like it's just not going to happen. So over time, when those days will happen, and they're inevitable that they're going to happen, um, you basically just need to try and control the downside. Yeah, you're right. I'll always put you in your place, man. Exactly, Neil. Nicely done, buddy. Let me know how that goes. I think you'll be a lot more. I just think you'll be a lot more efficient. You'll be more relaxed. You won't be as stressed. You won't be as tired. You know, you'll just do a better job, to be honest with you. So do that for your next probably 30 to 60 trades. You know, 30 is a good sample size to start off, and then you can just basically scale it from there. Because if you're not making money over 30 trades, um, you know, it's quite unlikely. It depends your trade frequency, of course. Yeah, but three in a row at 1% rest. The thing is, 1%'s fine. I mean, realistically, the trouble is with 1% is you need to have shit tons of money in a brokerage in order to for 1% actually to mean something. So realistically, we're all probably trading somewhere in between 2 to 3% per position, right? Or we have a maximum amount that we're looking to lose a day, you know. That's the way I see it. But yeah, thought I would thought we would discuss it. To be honest. But anyways, let's get off these treasuries because they're not doing anything. It's like watching paint dry. Wish I just took that view earlier on. Right, so let's close these off. File, because it's quite taxing on the PC. Quite taxing having up all these DOMs and shit. Do 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 do. So, how's everyone else's day been apart from that? You know, let's see what's happened today. The overnight session was an absolute. I mean, look at this straight line shit. And then when you do get this in overnight session, what happens? We correct. It's a it's a learned behavior. Sadly, this. Yep, pretty much. Pretty much. We're going to need to break one of these levels soon. I mean, if we zoom out a little bit, we are just really filling out. Normally, when the market leaves a day like this, if we bring up the full profile, oh, pardon me. Normally, when the market leaves a day like this, right, we went super bid. Then the next day, it's very common that we just balance and we do nothing. This was a holiday, that's why it's so small. And then typically, if the market is going to crack this level here, like here, for example, normally it corrects it pretty quickly. It doesn't like consolidate around it because now we're in essence just accepting these levels and building up tons of value now and trading this out. You know, so it's almost like it's more accepting of us to go higher, pretty much. Um, but yeah, still ranging at the moment. Nicely done, Will. Nicely done, buddy boy. What is the composite volume profile on the profiles? Do you mean here? Sorry. This is a monthly. This is the monthly point of control. Just to this. Bear in mind, this is a bit janky because of rollover. And then this one up here. This is the evening session or Globex, and this is the regular trading hours where we have the labels, the initial balance low, previous day open, so on and so forth. Yeah, I mean, typically you don't see this in overnight sessions. It doesn't normally just dump like this, but when you see this one direction like this, very often it'll correct because when overnight gets, extremely one-sided, um, it normally corrects. Well, I'd say there's a higher probability for it correcting than not. You could always just open drive it and bang it to the pits, but again, it seems relatively unlikely considering we've got a few days. The next 2 days are quite high impact data days. There does not seem to be a ton of volume today. Let me know if you guys have got any other questions. Ask away. Doing our usual, see if we can break here, um, and basically get to the overnight session high. We've not done that yet today. We've been toying around with the initial balance high for last hours. I mean, look at this price action, man. This has been in this range here for. I mean, look at this. This is shocking, isn't it? This price action. It's just. It's not even a range. I mean, look at it. I would say that if you speak to the majority of people today, regardless of markets that they've traded, I would say they probably lost. And if you did make money on days like today, then well done. But we'll see if we can. I mean, we can't sit in this range forever, so we're probably going to break it. We'll maybe probe the high. We are at point of control right now, so we shall see. I take it no one's got any open positions at the moment. You guys are all sitting in your hands, I'm assuming. It took me years, Eunice. It took me years, man. It took me about 4 years from when starting. I would say that those 4 years was not like every single day, um, like I have done now for many years. But um, I maybe sound like a broken record, but it's you almost need to look at it. You need to first be fresh when you're trading. We're not robots, um, which ironically is one of the reasons why all these firms are using algorithms now, because they don't make mistakes. They execute the edge when it appears without any hesitation. Um, so in order to give yourself a chance, you need to make sure that you're fresh. You need to trade at times where uh, your edge is most likely present, and that's normally when there's more volume. To be honest, um, you need to first make sure that every trade that you take is going to give you a chance that is better than a coin flip, because that's the thing. Um, just due to numbers, you can have a series of winning trades just by closing your eyes and pressing the buy and sell button. It doesn't. Do you know what I mean? There's it doesn't take any skills or any strategy to put together a series of, like, 2 or 3 winning trades or whatever. You know. Um, and very typically, you go through the motions when you first start trading of losing everything, over leveraging. Then you jump around with different strategies, is what everyone does. They try one for a while, lose money on it, jump across to another one, and so the cycle continues. And actually, people lose years of their trading journey due to strategy hopping. It's very very common, especially when you're first starting, because you're seeing all this, for example, shit on YouTube where you start with stochastics, RSI, MACDs, moving average crosses, and then you figure out someone recommends ICT to you, so you pop in some of those stochastics, and then you look at fair value gaps, and then before you know it, you're 6 months into that, and you're winning some, you're losing some, um, but you're winning enough to keep you going, but you're still losing. Uh, that's typically the cycle of what happens. Um, and I would say, really, what it comes down to is you need to be really selective in your trading. You need to know when the conditions are correct, and you need to manage your downside. I actually couldn't really give a shit what the strategy is, to be honest with you. You can. It really doesn't matter. If you can't control the downside, it doesn't matter what the strategy is, pretty much, because you're not going to be there long enough to let the strategy play out. Do you know what I mean? So you almost need to, in my opinion, not saying that any strategy is profitable, because it's not, but you almost need to look at it not from the strategy first. You need to look at it from yourself. What suits you as a trader? What's your risk management protocol, and what's your execution going to be like around that? And then you need to factor in the strategy, to be honest, because everyone wants the strategy, the box, the triangle, the you know special indicator that makes them to buy and sell and stuff, but it's actually nothing to do with that, in my opinion. Now, where order flow comes into this is if you take your actual strategy, whatever the hell that may be, and I like to break strategies down into really two main buckets, which is mean reversion and somewhat of trend continuation or breakouts, which is I just call them all profile extensions or continuations. And that's really your two main strategies. Whatever which way you look at it, they're all in one of those buckets. And in some days, a mean reversion strategy works well. Some days, a profile extension strategy works well. Um, and basically, on a day, I think having a bias is is actually not the way to do it. If I'm perfectly honest with you, I think you should go in every day fresh and wait and see what the market does every day. Because if you do have a bias in what you're expecting to happen, you need to be willing to accept that you're wrong and either change your mind or walk away, pretty much. And that's really all what it comes down to be honest. Well, that's exactly it, Eunice. And the thing is, um, if you don't have enough data on your trades and what your behavior is like for clicking the mouse, you don't know, because you then, I say this a lot, but you then suffer from recency bias, where if you have a string of losing trades, you then feel bad about it. But then if you lose three trades in a row, that's not even a dot on the map for the next 100 trades. Do you know what I mean? It's literally meaningless in the stats. But for you, in that moment, it's hard to stomach. And then typically what people do is when they lose three trades in a row and they've probably risked more than they should and not taking the normal stops, they end up increasing their position size to get back to where they were, and then um, they end up just really digging a hole. You know that it's as soon as someone starts telling you about winning all the time, typically people that have from what I've noticed, there's two main strategies as well. When you drill down into the numbers, you have I don't even think 3-to-1 risk to reward on average is a thing. To be honest with you, maybe in swing trading, but not in day trading. To be honest, each their own. But I think you're in the sort of maybe maybe 1.5 to 2-to-1 uh, risk to rewards bracket, or you're sort of in the kind of less than 1-to-1, sort of 1-to-1 risk to reward bracket, and then you're in the sort of, if you're in a 2-to-1 risk to rewards, you're on about the 45 to 50% win rate. And then if you're 1-to-1 or less, you need to have 65 to 80% win rate. um and that's pretty much it. I've seen some people saying things like, oh, I've got a 3-to-1 risk to reward and I win 80% of the time, and I'm like, yeah, sure you have, man. Unless you're taking one trade a month, then maybe, but that's just not a thing. Those numbers don't add up. Because if that was the thing, they would basically, Goldman Sachs would just press delete on all the quants and just phone that guy and say, hey, can you just like trade their billions of pounds of assets for us, please? Do you know what I mean? It's not a thing. Well, this is the thing, Brennan, buddy. It happens, dudes, and you know, it's part of the journey, and honestly, until you correct that destructive behavior forget it. The strategy is completely and utterly meaningless. I could literally give you a strategy tomorrow. I wish I don't have one, by the way. This I'm just talking hypothetically, but you could give you a strategy tomorrow that would say over the next 1,000 trades you're going to make, I don't know, £1 million, right? But in that 1,000 trades, you maybe have a random distribution of wins and losses, and if you don't continue with the same methodology and plan in the same market conditions, you're not going to get to the 1,000 trades. Do you know what I mean? Everyone needs to see it in a larger trade sample rather than the next day, the next trade as such. Do you know what I mean? It's very hard to do. It's very hard to do, man. But um, I would say when you do that, if you had a really shit day, I had a bad day as well. When I have days like this, and they happen, um, spend time with your journal, pretty much. Uh, you know, so that's what I would definitely recommend. You need to spend time with your journal, run over your trades, see that if make notes on like today wasn't the day, run through your trades. You need to recognize that behavior, and you need to start just do mental cues, post-it notes, notes in your diary, things like that, because you're your own worst enemy. Same as everyone, probably everyone in here, man. And the way that I see it is, if you can nail down the times that you're the most profitable and the most vital and efficient in the market, you give yourself a higher chance to make good decisions in that day. And the less time you're actually in front of the screens and the less time you're actually in the market, the less likely you are to make stupid decisions and to give back some of the profits or to steam in or so on and so forth. Well, that's exactly the thing, Brennan. You need to start. You need to think about it the other way. This is a long term. Think about it in terms of how a casino does it, right? Vegas is built on like a 2% edge. You know, so they're basically there to just play their edge out long term. Granted, they've got unlimited capital, but you know what I mean. It's the same sort of theory. They're there every day, taking on bets, taking on risk, and playing out the 2% edge. We need to be doing the same. There's not many gambling activities, and trading is gambling, whatever which way you look at it. You're taking a gamble on the next thing happening. We're gambling on the future that we don't know is going to happen, and you don't need to know what's going to happen in order to make money. You just need to recognize patterns, go with momentum and strength, and trade probabilities for what has happened in the past is likely to happen again. you know and when you think about it that way, over leveraging and over risking, what possibly is different about this trade that warrants doubling your size? Do you know what I mean? There's really nothing. So it needs to be a more longer term thought process. And you also, if you've got a demon inside you where you start nailing buttons and doing whatever when you see reds, you need to start locking yourself out of platforms, or if you're trading prop or you're trading broker accounts, you really need to start putting things in place. But yeah, I agree, Neil. The 4-to-1 setup is crazy. No, no one gets 4-to-1 unless you've got like a 30% win rate. And and this is the thing. It's more common to have an 80-90% win rate and have a rough risk to reward because it's easier in the psyche. Very very rarely does anyone ever have like a 10 or 15% win rate and an extremely high risk to reward, because that means you need to be comfortable losing like 10 times in a row. It's just not possible. A lot of people are not wired that way at all. Brennan, if you're for the regarding Sierra, you can probably hook it up with Rhythmic, but I would recommend getting Denali data feed while you're at it. It's definitely the way to go. Yeah, exactly. Will it makes a big difference. Display it in ticks or points depending on the market you're trading, and also don't have like Iron Beam or Rhythmic or anything open just to check your P&L, because you end up not trading the trade, and just you know what I mean. You need to stop that. It's much easier said than done. Now here's the thing. Have you guys ever, this is probably a fantastic learning curve. Have you ever traded your normal size, right? Um, Not looked at your P&L at all, so don't look at it before and after the session, and just trade. Trade one contract and execute your trades how you normally would, right? And then check it at the end of the month. I would also then advocate as well, if you are looking to trade the DOM and you're new to it, so you start learning stuff. I don't advocate doing this with real money, but have a look at the charts so you know where the market is at, and draw out your key levels that you're looking to do business, and then don't look at the charts. I actually, when executing on a day, don't have the charts up. I look at them as a pre-market to roughly gauge well, I got my arse handed to me today for doing that. So tut tuts, to really give an idea of what my read was going to be. Um, but any day you're going to have days where you read wrong anyway. You're just not going to win on those days. That happens. But I still think you need to do your pre-market session prep, so that you've got a rough idea of where you're at for the day and the key levels that you're looking to get involved in. And then I just close the charts, typically, and then maybe check them every once in a while just to see how the delta's moving, and then solely look at the DOMs. Is pretty much how I like to do it. Brennan, there is no way that anyone wins every day. The thing is, people don't come on and talk about their shortcomings. It just doesn't happen. If you go into likes of Twitter and stuff, everyone would be a millionaire if you go into these platforms. No one ever posts the fact that they lose and stuff, or no one really talks about it. Whereas the people who've been training for a long time, it's actually got nothing to do with winning. It's to do with the losing days. That is it in a nutshell. Fuck the winning. You know, if you can't control the losing days, you're not going to be there to win, and that is literally it. Period. You know, until you get a handle on controlling the down days and keeping them within a manageable proportion of what your average winning day is, you're not going to be there in 2 months' time anyway. So You know, you need to control that. So anyone that just posts wins or discusses that, whatever the case is, take it with a pinch of salt. You just need to treat it as entertainment value. And also, fuck these people. You know, you're in your own journey. You know, it's you keeping your own lane, focusing yourself. Just because these dudes are showing P&Ls of like plus thousands a day, when people show me that they make thousands a day, my instant thought process is, well, you clearly are really sizing up. Because in order to make thousands a day, we know the rough ATRs and rough movements that a market makes. So they need to be heavily leveraged to make that size. So, they make that one day and then the next day they lose it. It's very, very common. It would be much better for someone to consistently put up small, manageable winning days that has manageable losing days, and you can then almost forecast what the returns are going to be over the next quarter. You need to start thinking about this like a business. You know, if you have your own business, you have staff, you have employees, you have quarters, you have management accounts, you have everything that you need to do, admin, books, you know, responsibilities. Why is this any different? And if you had X amount of marketing budget to spend, you're not going to go over that, are you? So why would your trade plan and execution be any different? You know an amount you're willing to spend of a day that is already predetermined at a time when you were level-headed, and that is the amount at your business size at the moment until you scale is the amount that you feel is necessary to risk. And the great thing about trading is, apart from charting platforms, you don't have any other overheads. Your day-to-day exposure is your overhead. So that maybe resonate with you a little bit more if you think about it like that. Whatever which way allows you to try and get rid of the demons in your head is the main way to do it. Well, trader boy, I wouldn't really go that far, man. When you've been doing this for long enough time, you can see you just can see the bullshit, to be honest. And this is the thing as well, is that I like listening to, you know, psychology things and trying to improve. It's a continual evolving process of adapting all the time. And it's nice to hear things from traders that have been doing it for a while. Because, if you ever speak to someone that has been in the business for a while, they never really discuss their winning days. It's always about, learning how to lose. That is it in a nutshell. Because if you can't control that, then there's not going to be a next quarter or next trading session or whatever. And that's where, to be honest, I very, very, very rarely, well, to be honest now, I don't watch strategy videos anymore. I stopped that years ago. I actually think it's a distraction, to be honest. So I don't watch a strategy video on YouTube and go, oh hey, I'm gonna implement that. I stopped doing that. And you may be thinking, well, how do you do that? Because you always want to evolve and adapt. But there comes a time when you're comfortable with your own strategy and how you perceive the market. That everything else just a distraction. And you need to how you get to that stage is you need to start building data on yourself and your own trades so that you have confidence in your execution. So only way you're going to do it. Exactly. Exactly. I mean, well, you technically, the most common strategy, probably for swing trading, works really well. It's slightly more challenging on day trading, I would say. But if you you can say for example you risk a pound or a dollar and you return two, you'll need to be right half of the time. So the one of the main advantages of that type of strategy is um, when you do lose, it's quicker to make back your losing trades. You know. Hey James, yeah, I did. I took two break evens in the tens, shorted the lows, and shorted the probe with the lows after I decided that I was getting stuffed with my longs, and then when it did, they basically absorbed, and I took another stop. I took a break even. I think I took like three scratches on the 10 year today, and I think I lost two ticks on a long, and then just got my arse handed to me on the 30 year today. Um, so it was actually quite shit price action. I know it was there was just so much absorption in the offer, and it wasn't going down that smoothly. It wasn't going down that smoothly and probing. It was going down like three ticks, then absorbing tons, and then going down. There wasn't super easy price action today. Let me let me mute this. It's annoying. How did you do, James? Did you trade okay today? I mean, in hindsight, I should have basically faded any form of buying, to be honest. But we've not really extended that much from the overnight session. We didn't really correct. We've not really extended that much. But did you take any trades today? In hindsight, I should have just shorted and just forgot about it. Um, Brennan, I don't even know what Trade of 8 Dom looks like, dude. To be honest with you, if it doesn't have the columns in the middle, so the recent bid volume and recent ask volume, then I would say no. Um, these are quite sophisticated depths of market you're seeing here. It's taking me ages to build, but I've got MBO data. The refresh rate is really good. I've also got Delta. I've got a volume pro. I mean, there's tons in here. Um, but I would say at a bare minimum, you need the market orders in the middle. You need to make sure that they're refreshing correctly, and then you need resting bids and resting offers, and then you need a volume profile as well. That's probably your minimum, I would say. Otherwise, you know, because if you don't have that, you go into a lot of YouTubers and they don't have that, and I just don't feel the DOM is that useful, to be honest. I know some people use secondary platforms at the same time, like heat maps and stuff, which can help as well. But I think it helps to see the market orders too. James, honestly, I wish I didn't trade as well today. Literally, anytime I bought today, I just get hit with a reload seller. Literally, if you look at the if you look at the 30 year, the delta is to the moon, but completely absorbed. And then they were just aggressively selling the tens. Um, And then when I sold today, I just get hit with a reload buyer and it chopped around and it was just shit. But these days happen, man. That's the thing. What are the things you watch on the Dom? Yeah, there's GDP numbers and everything as well. So the next couple of days are going to be pretty volatile, to be honest. That was where my thinking came for the fade back into value, but it's just not really did anything today. So what did I look for in the Dom? So it depends on the trade setup. If we're sweeping the high or sweeping the low, I'm looking for a stop run to take place. You see a blip in price. Then I want to see some absorption happening, and then I need a snap back in price, and then that gives me my stop. And then ultimately, I'm looking to see, if I'm looking to sell, I'd like to see the bid been pulled, and then the trade needs to happen pretty quickly. To be honest, we've ran over these trades a dozen times on the streams. The sort of trade plan of how they work, but it's the same sort of idea. But the thing is, it works better in indices than it does, on the likes of treasuries. Treasuries is a very momentum-led market. Yeah, Brennan, I think I mean, the one thing I would say about Sierra is it's pretty difficult out the box. it's not, um, it's not for the faint of heart. I mean, we can help you with the chart books and stuff, but we can send you some of the chart books to save you time, if that would help. But nice to done on not trading today, James. Did that make sense, Shank? Just because you see the depth of market doesn't mean you can always just take positions. It's, like for example, um, we've chopped around here for a while. I wouldn't be surprised if we go and hit up here and revert back, but this area is really traded out. So I do suspect, because we've spent hours here, if we do crack here, there'll be a lot of stops. So we maybe then get a nice little probe above the overnight high and then potentially correct back into POC. Just because we've spent so much time here, so it's very close. I mean, how close this is. I mean, it's 20 ticks. It's not that close, but I still think if we do break out here, there's going to be stops. It's probably going to bang us up like 6, 7 ticks, and then more people will be stubborn to have their stops up here, and then we're not that far away from the overnight high. Yeah, let me know if you guys have got any other questions. Yeah, it's going to be a pretty volatile couple of days with the numbers coming out tomorrow and Friday. When you see a big order sitting on MBO, you'll be guessing. No, so the thing is about MBO here is the way I see it is they cap the range. So these are obviously algos. You saw that jumping from here to here. You want to see how this happens. So if we clear this, essentially what these orders do, and the way that I view them, is they cap the range. So the market for the upside needs to break here, and the market for the downside needs to break here. So when it's the first touch of these levels, you'll notice that it will trade off it and then it'll just bounce right back. So let's see how they do it here. So they lift into it, and they know that the sellers now know that there's size behind them. So sometimes it doesn't even trade into it, and then it will drop back 3 or 4 ticks. So you want to see if they're going to take the full amount or if that's going to be pulled. But I almost use them as a range gauger for the moment. And typically these orders do like to get filled. And it also gives you a sign of the liquidity that's there. And what I mean by that is, if buyers were extremely aggressive at the minute, they would just be taking this. Do you know what I mean? So like right now is not the time to potentially be going long, because they should be absolutely gobbling this 100 lot up. You know, they should be ripping into this. You know, so it ticks off it. You want to see them take this full amount, and they're not taking it. You know, and then sellers will be seeing that, and then they'll be like, okay, so we can hit into the bid now, and then some bid gets pulled, and then before you know it, you're back down here. So they're almost testing how aggressive the buying and selling is with these order types. Because 100 lot looks a lot, but to these people, they've got thousands and thousands of contracts to put out. 100 lots is it's like a micro lot to retail. So hopefully that makes sense. So notice this is again, they've just hit this level and the market's just not taking it. So that should now give you an indication that buyers are not that strong here. And then sellers then can start hitting into the bids, and if these bids do get pulled, then before you know it, you're back down to do the same behavior down here. Because with liquidity being on the book like that, and buyers would want to get filled, they should be lifting that and just been like num 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 num, you know, and taking it like a cookie monster. You know, should be gobbling up that liquidity there. And now they've then moved this up now, so this is interesting. So let's see if this gets pulled. This was down here, they've just shifted this up. So let's see if sellers are going to take this, if it does get down here. My opinion on when they shift it up like this, you know, it's almost like they're trying to, yep, see, then dragged it down here. So my opinion of when they do this, they're doing this to try and eke the market up a little bit more, because actually they're trying to sell. So this order here, in my opinion, is actually a getting out order. And exactly what we just said is what is happening. Then they pulled the fucking order. Sneaky bastards, man. Honestly. See that? That wasn't even a real order. Honestly. Ah, I tell you, these guys, man, they're at it every day. Seriously. You know? Do you understand what I'm saying here with that, though? Right? And excuse the language as well. I just think it's ridiculous. They planted that order there, tested the liquidity in the book. They saw that buyers did not gobble it 3 times. Then they started hitting into the bids. They also had one last final test by moving this 100 up here to test the buying strength. Because if there's 100 down here, just below them, people would see that, or other algorithms would see that. And then they would start buying it up because they know there's some size below them. Right? And then when they didn't do that, then they can say, well, this bid here is extremely weak, so we could just start hitting into it. And before you know it, you're back down here. And where are we back down to? The MBO orders down here, where we then tick off again and do the same shit. I just went on a complete rant there, but does that make sense? Hopefully that was helpful. I need that for your ringtone. I like that. So then same story down here. So you can see that some negative selling just come in. So the trouble is now, you've now got point of control, which we know normally is a sticking point, and there's these orders down here, but my opinion is the ones that were selling up here, this 100 lot, these are this guy's size to try and get out of the market. So we want to see if he can basically hit the market down here to start getting filled, and then when we do fill out some of this liquidity, then we'll probably go back up. you know. But we haven't filled this here yet, which is kind of slightly concerning as well. So again, this is the type of behavior that you're going to see when the market is like this. It's not doing anything. So all they're doing is just making a market. They're just flopping price around. Nothing is happening in the world. They're just taking positions and moving price and gathering liquidity and doing it. It's all a fugazi. Mark, buddy boy, how's it going? But yeah, it's definitely like a trap. And the fact that NQ's going bid is taking that down, but would notice if sellers are aggressive, so they took that 50, so you want to see them clear this and then clear the price down here. And then if they do clear down here, I wouldn't be surprised if they then whip it back up. And now whereabouts is this price? 28.75. Oh, would you look at that? It's a tick below the range. The little micro low. Would you look at that? What a coincidence. Not. So I reckon what they're going to do here is they've already gathered up their selling positions. They're aggressively hitting into the bid. They need to get through point of control. NQ is also going down. The Russell and the Dow are kind of not really doing anything. But you want to see if they can fill out these orders. But what I would expect would happen here is they can fill out these orders round about here, and then they just reverse it back up and do the same. Now they can do this at any real time. It just really depends. But I need to do a session at some point where I'm actively trading. See, they've just pulled those orders, and now they're putting this up to drive price down. So watch these trades here. Okay, let's see if they trade. So I reckon these are going to get filled because this is their position then to get out, and then once these start getting filled down here, we want to see the market pop back up. And they're planting these here to try and create more selling for the other algos to drill in to fill these out. Okay, they're still doing the same again. They're wanting this order down here filled out. Let's see if they're going to do it. And they've pulled it. Now they're probably going to pull this back up. Let's see if they do. They're placing them down here. Wow, got all these orders down here. Mark, I do not trade London Open. London Open is really only relevant to Eurex products, not for the US. It's meaningless for the US. I don't even notice a single difference for London Open in US products. It's maybe a bit of a stretch. There's some volume, but it's nothing crazy. And this all started, by the way, from the I was going to say manipulation, but from the shenanigans up here. It all started from up here. So there's going to come a time, right? And it just so happens that they've done it below this low. There's going to come a time where they fill out enough orders, right? Where they then start whipping it back to fill out here. And I wouldn't be surprised if these orders are actually pulled themselves. But yeah, it's basically like herding sheep. That's effectively what it is. So retail doesn't even look at this. So these orders are not for retail. They're for to get the other algorithms. And would you look at that? They drive it below the range, okay, take out some orders. They're now out of their positions that they were short from up here, below the range, and now they're now banging it back up to the point of control where they can now work. They're now working the bid. This is like textbook market making 101. This. Now they start then planting these orders so that they can try and see how strong the sell side is anymore. And let's see, watch for when they're going to start planting some orders up here. Let's see if they start doing that. So if sellers again were really strong, they should be taking this full 100 lot. Let's clear. And they're not. Notice it stops at buy tick again. Classic behavior. So you want to see them take this full 100, and they do. Okay. So sellers have got a little bit of a punch to them still. So other algorithms right now are going to be noting that. They're going to be saying, okay, that full 100 lot was taken there. And then now they're going to test the buying. Okay, are they going to take this? And if they don't take that, they then know the bid is relatively weak. So let's see if they take the full amount. Okay, and they do. So right now, both sides are then actioning. No idea what's going to happen. So you've got buyers that are now taking liquidity coming in with delta, right? The MBO is not providing any real meaningful points, which is to be expected though, because again we're in the middle of the range. But you're doing this so that they can test the specific strength of the liquidity and how aggressive are the participants. Because when you've got 100 lot there, they should be taking it, and in those two instances they took it. So when they don't take it, you need to be scratching your head and saying, okay, if they're not taking this 100 lot or this 50 lot, they can't be very strong then, are they? Because think about that. They just want to get filled in positions, right? That's literally what makes the market move. Yeah, so that 38's, like I described, right? It needs to be at a key area for me. So this was, if we look up at 38's when price was up here, it's broken outside the range. And when the market is in this range, it loves to just probe the extremes and then go back into the middle. That's what these algorithms do. They take price one way, gather some orders, then they start scaring each other and testing the liquidity by planting out these orders, right? And if so, when we were up at 38's, if you zoom this up, see you didn't. How can I do this? Right. So we're looking at this here. Okay, this was when the order was at 38's. If this was to break out, right, and buyers were being super aggressive right here, look at this. Delta's up, delta's up. Okay, we're breaking out the range. Now they then are saying, right, let's test the buyers, man. So let's throw out 100 lot because they want to get filled in their shorts anyway. So they throw out that 100 lot, and buyers tick off it not once, not twice, but 3 times. They ticked off that, right? And basically, what that should then tell you is, look at the chart right now. It was going up, okay? It's broken out of a range. This is about as bullish as it gets for normal charting people. You know what I mean? People would be buying that. But the actual size that moves the market was not, because the size that moves the market ticked the 100 lot 3 times and didn't take it. On times where there's a breakout happening, they would be absolutely gobbling up that 100 lot. It would be like num 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 num. Okay, literally. And then it would have broke through that and would have tackled the next highs, but it didn't do that. So that's the reasoning. So hopefully that makes sense. And then what the behavior normally happens is when they see that, after that happens so many times, you think, okay, the buying's not that strong anymore, so we'll start feathering into the bid. We'll hit into the bid a little. Let's chuck a little 10 lot. So you chuck a 10 lot, okay, we're filled. And then they chuck another 5 lot. And then they see that that 50 that was sitting there, like here is 66 for example. Oh, okay, so 40's just pulled. So not only did we have the 100 lot that couldn't be filled, when we're feathering into the bid, right, and throwing a little 5 lot, orders have been cancelled, right? And then they just start feathering in a couple of small, breaking down their sell orders because the book's that thin these days. And then before they know it, they're at 38s and they're back down to point of control. That's all they're doing. And they're doing that with algorithms these days because they can do that in nanoseconds, and they can start hitting tons of little, one lot programs to test the next price. How strong is it? Because in a second, if you look at that, they just hit 2 lots, right? So in that 2 lot position, when these guys have got thousands and thousands of lots at their disposal, 2 lots is nothing. They're doing that to then test. So they trade 2 lots and they see, okay, 30's been pulled, now 50's been stacked here, right? That's then traded. So we're completely imbalanced right now. The market's not doing anything, but this is the type of behavior that they try and will do to test each price. This is why the market is run by algorithms, because it's absolutely impossible with how thin the book is these days for you and I to read this. Not saying we can't read it, but you have to do it in a more holistic level and an overarching view, because you can't see it this quick. But they're taking in all of this data, and analyzing it in microseconds, nanoseconds, very quickly. Do you know what I mean? So now they need to see sellers again should be taking this 100 lot. So let's see if they do take it. Okay, three's ticked off it, literally three. They've then taken the full 100. So sellers right now are now starting to get involved. Okay, so if we don't go back up and fill these orders, this should be looking to crack our next point of interest, which is going to be here. We want to see if there's any shenanigans that happen down here. Now, what level is that on the chart? What's the absolute low? So it's 26 and a quarter. 26 and a quarter, so roughly here. So we want to see if they're going to fill out these orders, because if they don't fill these orders, they do. So now the sell is then off, right? Because you want to be seeing then, this is why they then pull orders, because if that was to go down, it would have went down there. Then you start pulling orders. Because back to the same theory, if this was to go down and buyers were done buying, they wouldn't have bought that 100 lot. They wouldn't, you know what I mean? So they're constantly just throwing out little bits to test stuff, you know? So now they need to try and crack through 27.5s from the sell side, but then they're probably going to go back up sides to the point of control and see. And now the buyers are now going to test here again. And also when they're putting this size here, they can typically then start propping the market up a little bit. So when it goes down, we see if it ticks through it. Does this make sense, guys? As to what you're seeing? I mean, I'm quite aware I'm ranting here, but I'm just trying to run through the flow of what I'm seeing in the market. And you can understand that when I'm looking at this and looking at the market in this way, it's very taxing because you can't miss a beat. Do you see that 14 traded there? They just pulled that full 50. So sellers need to try and trade through this 28s. Neil, yes, I would. The only trouble is it's not done for traders anymore. It's done by quant dudes and done by programmers now. I mean, there'll be head traders that'll be there to execute the strategy, but it's just done over mass data now. You know, like we're seeing the volume of. I mean, they have the amount of data that these guys are going to have is crazy. It's crazy. Now, I'm going to let you guys into a little something to show you how sophisticated some of these systems are going to be. Okay, there is AI companies right now that have got the sophistication for supermarkets, right, to basically tell the company within a 95% accuracy and confidence interval what the next sales are going to be like for the next month with a 95% confidence interval. And they are taking things into account like the weather, what events are happening, what paydays are happening, if they've got any holidays booked for the average times. You know, so many different factors coming in. Times of the year, seasonal, you know. Now if they can do that for big supermarkets to project their sales for the next month, you better believe that these firms are going to be able to know at the same time what is the average volume in all of the underlying stocks, and again with the NQ and with the yes, what about the option prices? So they'll know within, you know, a statistical variance and confidence where everything is in a proportion to a mean, right? So the amount of data that these guys have is fucking nuts. And we're only limited to what we see in the screen. And that's where your objective here is to try and see where these guys are looking to leave the footprint. And it's not a pun intended for the footprint chart, but where are they leaving the footprint and what kind of games and shenanigans are they at? Because there's a reason why they're doing that. So you just need to bear it all in mind, to be honest with you. It's much easier said than done, but you only get this, you know, level of fluidity with the market when you've been watching the damn screen for so long, you know? And seriously, what is the chances of someone coming in with a random charting platform being able to beat Goldman Sachs with the with the most data available in the market? And not only do they have more data and where the mean is and where the averages are for all the underlying stocks options and the corresponding futures markets, they're also buying order flow data. You've got the likes of Robinhood's, you've got other brokerage firms that'll be selling them order flow. So not only do they have that data, but when they're placing these orders, they know like a second, which is a lifetime to these firms, right? What sell orders are coming in behind them. Do you know what I mean? It's crazy. It's not a fair game. Put it that way. The definition of a zero sum game is very true. That's where you need to find your niche and you need to nail it. And when I tell you all this information, see with your next trade, right? Is there any reason why you should double your size? There's really not. You know, there's really not, because there's no danger these guys are doing that. But I have went on a real rant. Hopefully you guys don't mind. Yeah, exactly. Exactly, TP. That's the thing. And the only way that you're going to be able to have it as an unfair advantage to you is to know exactly where these large firms are getting involved. Okay, so the book is looking pretty thin to the upside here. Let's see if they can crack above. There is some more buying delta coming in that looks like it is absorbing. We're going up but not doing anything right now. So buyers need to basically break above 32s and hold. Well, I'm glad. I'm hopefully you find it valuable, TP. It's just a constant, micro range. I mean, the thing is, it's hard to trade these. When they're doing this, you need to be really in line with the market, but you really can only be scalping like 4 or 5 ticks if you're doing this because the ranges are so tight. They're pulling bids and offers a lot. But feel free to ask any other questions that you may have. As we said, the buyers need to break 32s. Sellers need to do something with this 100 lot, which is basically propped up around here because we absorbed 230, traded 23s in here, but didn't take the full 100 at the time. And then we've went bid back to point of control. NQ is out of value as well for this day's session, and the Dow and Russell are at point of control. So definitely NQ is the one that seems to be dragging this down. So let's see if buyers can break above VWAP and above 32s. If we do, I would expect a little pop as well, like some size to come in and pop it above, as I would expect it to be just a few stops up here. So when there's divergence, I basically start scratching my head, right? Is it's an indication. Um, it's an indication to something, something should be happening that's not happening, and why, and where are the key inflection points as to where the divergence is going to cause pain. And then ultimately, I would look to try and see if we trade through that and potentially go with it. Like right now, we should see a little pop. NQ's ripping. So if we can see a pop above here, we should see a little mini stop above this We were seeing a little bit two-way here, and the book is not labelled out until we got up here. But you notice how they're laying out these 100 lots, and they're doing the same down here. So they're planting them at both sides, and they basically cap the range. Because to be perfectly honest with you, um, say you were the same firm, right? And you plant them up here, and you also plant them down here. Because see, to be perfectly honest with you, it doesn't really matter the way that the market goes, does it? Because you're going to make money anyway. If it goes down here, you're just going to reload the bid, you know? And ideally, if the price does get down here, you want to be at least net short so you can start getting out down here and get filled on your bids. Then you can start lifting up into the offer and you take it back to the point of control. If the market somehow breaks up here, then you hopefully you're going to want to make sure that you're net long, and then you do the same up here. You start lifting into the offer, get filled up in the offer in these prices, and then you start hitting into the bid and you drive it back down into the point of control. So it doesn't actually matter what way the market goes. These guys are working both sides of the book. So it doesn't really matter. It's fucking meaningless to them. You know, but we're directional traders as such, so we can't do that. Because what, just as an example, is a trade plan for what they'll be doing, right? Say they are net long, right? And they don't know what's going to happen, but they know roughly that the market is going to, on a day like today, is going to end probably somewhere within this range. Let me get my trusty rectangle out again. Let me just explain to you how the market makers roughly look at this on a bounce day. Now this is quite a big box, to be honest. I'm probably giving this a little bit much, but you get the general theory. If they know that the market is going to end, let's make it a little bit smaller so that it's, you know, say they know the market's going to end somewhere in this range, okay, somewhere within like a 30 tick range, because it has done pretty much been the point of control for the contract so far. And generally what they would be doing, so say they're net long, right, and the market breaks to the downside, well, they instantly hedge in options, so they're covered, okay? And then when the market then gets down here, they start getting out of their options and they start working on the bid. So they start then getting these orders then filled out, you know, and then they maybe want to be net long, so then they take it back to point of control, so they make money on the options and they make money on the bids. And the same thing happens up here. So if they're not net long, again they hedge in options, or if they are net long, they just bang it up to here. They start getting out of their positions up here, and then they start working it back into the mean, back into this box. So it doesn't actually matter which way the market's going to these firms because they're covered both ways. Makes sense? That's what market making is. They're just making a market. Whether it goes up or down doesn't make a fucking jot to them. They're not trading directionally. They've got quotes out on every price to make the market efficient because they're paid to do so by the exchanges and the schemes, and they get lower commissions and lower margin requirements. So they like to take risk, you know, because it doesn't cost them very much to do so. And now with the book being so thin as well, it's much easier for them. It's much easier for them to move price. They can move price with 20 lots, whereas before the ES was not as volatile 3-4 years ago, just because the book was much thicker. Good question, TP. It will move to 77. So if that 100 gets fully traded, it will disappear. If only 23 trades on it, it will move to 77. If it stays there and 23 trades in it, well, it means that there was people fronting that order that get filled before the 100 lot. So can you imagine pressing down into that? Stop thinking about it like a market. If you can think about it like, you know, a supply of something, you know, if there was like a supply of Mars bars, and you know there was 221 available, right, and someone only wanted to buy 23 of them or sell 23 of them or whatever, you know, If someone was really eager, to take the lot, they would take the full 221. So just forget the DOM. Just in a general theory of anything, it shows you that whoever is looking to be involved at that 221 is not really interested in taking the full amount. Otherwise, they would have took it, right? Hi Avi, how's it going, dude? I'll definitely. Can you pop me a link to that? I'll go into the CFTC and see that. I'd like to see in the last little while. I was doing it with the normal one. Goldman's probably find, probably every month, to be honest. I mean, you guys do realize that this flashing the book and stuff is completely against the CME rules. But then here's the thing: is it's almost like the nudge, nudge, wink, wink. These firms literally are the backbone of the CME. They provide the market. They keep the CME out of the papers, right? And they provide the CME with shit tons of money, right? And their job, they employ these people that are on the payroll, right? Not probably by actual, you know, they're incentivized, right? Not literally employed, if that makes sense. But they're doing that so that they can keep the exchange, calm. Because the futures markets, the last thing the CME wants, and the Federal Reserve as well, to be honest with you, if one of the market making firms shit breaks or something happens and futures drops like 1,000 points or something, that's the last thing these companies want. Because they don't want it to be in the papers. They don't want fear and all this shit to be in the market. So these companies are put in to keep a status quo, pretty much. And the nudge, nudge, wink, wink idea is, are you really gonna phone your best client and say, you know, hey John, I can see you spoofed too much yesterday. Can you stop that, or we're gonna close your account? Are you hell? No chance. You're just gonna turn a blind eye, um, and almost fight their case if anyone looks into it. And that's why these firms almost have a quota. Say for example, they've got, these numbers are arbitrary, but say they've got 50,000 contracts to get rid of in a day, right? And they trade 50,000. If they cancel, I don't know, 5% of them for that day, again, these numbers are arbitrary, but they'll have an amount that they know they can get away with cancelling, but they use them at the right stages to prop the market up that extra 3-4 ticks. Or when it gets to a high and they know the stops above it, they just bang it. So what I mean by that is, say you get to the high here, right? Oh, say you get to the high here, where my little dotty line is, right? You get here and you can see prices trading. You know that if price goes up here, there's going to be stops triggered, and you need to get out of your long positions. But you can't get out right now because if you started selling, you're going to bring the market down. So what you'll do is you will um, purposely bang the market with a heavy buy order to smash the market through this level, so that you then get the stop orders up here that allows you to get out of your positions. Does that make sense? And that's, whatever which way you look at it, it's kind of manipulation, but there's nothing. It's how do you prove that? And as the market's going up here and the bid is looking a little bit weak, they start placing out a couple of hundred lots so that they can create some more fake buying to try and drive price up here. So they've actually drove the market up 3-4 ticks while not buying anything because the orders are not real. So the other algorithms see, okay, shit, we've got some support behind us by these big orders. Let's feather in, and then the offer gets pulled. They work off the offer and some of the prices, and then we're getting back up here. They then know there's going to be some orders, so they've actually moved the market up 3-4 ticks by not buying anything, by just showing some strength. And that happens two ways. You've probably got some buying that happens, and then when buying happens here, you've got other algorithms that pull in the offer, and then we're up here again, as I've said, and then they would just bang it through here, and then before you know it, you're up at this VWAP band, and then they can get out of their positions, then they put in an iceberg, start holding the book, and before you know it, they hit into the bid, pull the orders, back down to POC. It happens all day. Exactly. Now here's something, right? So doing this to get out of positions. Now imagine, look how thin this book is, right? Look how thin this book is. So it's currently, 80 by, we'll call it, current price, it's 30 bid, 50 offered. Absolutely, extremely thin, you know, ridiculous. But like that's a different story. Say you were net long from down here, you accumulated some contracts, right? And just say for the day you were net long 1,000 contracts. Again, these numbers are arbitrary. I've got no fucking idea what they're actually long, right? I wish I did. If I did, I wouldn't be. I would have been in the Bahamas, right? So say you were sitting net long, say 2,000 contracts, right? And you're up at this price, and you want to start getting out of your position. You cannot just go and say, right, I'm going to sell. I'm going to go and sell now, because when you're selling those positions, you're going to take the market. Let me get a line. When you sell your position, you're going to take the market down here with your sell. I mean, literally, if you've got 2,000 contracts to get out and you want to be done by close of play today, right, and you start getting out of your position, you are literally, if you hit market, you're going to take the market's going to go back down here. So you know that most likely everyone that's sold, their stops are going to be, let me zoom out a little bit, their stops are going to be here and here. Okay, roughly about here. This is where the stops are going to be congregated. Above this high and above this high. Now what you'll notice is they're actually doing this in action right now, by the way, which is quite funny. So they're going to buy this price up. Okay, NQ's also leading. And when it gets up to this price, they then say, right, we want to be out somewhere here, but we can't just sell now because this, as we discussed, will take the market down. So what they'll do is the market will go up to this level. Let me just literally draw this. The market will go up to say here, where my little box is. Okay. And then they'll say, right, we know within this range, it may not be right above here, it may not be here, somewhere within this range, we know there's going to be some orders triggered. And we can start getting 100 out here, getting 100 out here, get 200 out here, 100 out here. In fact, let me actually try and put this in terms of the book as well. So what order price is that? It's above 38, right? Yeah. So it's roughly about here. They've actually got it placed beautifully here, which is quite funny. So let me do this before so here. So this is roughly where the rectangle and where my little dotted line is, right? So the price gets up here. They know this is actually where their orders are right now to get out. It's probably not the only ones, but they start laying them out. When the market gets up to here, they will basically bang into the offer. So they'll buy some size in, and it will just be enough to take price over the stop threshold so that stop orders get triggered, and it allows them to start getting out of their positions. And then they can start getting out here. And then what happens when they're then out of their positions, where they've then potentially worked out a few thousand contracts, say somewhere around about these parts, then they start doing the opposite side. They start holding the offer, hitting into the bid, and driving it back down here. Does that make sense? They're actually playing this out right now, which is quite interesting. So let's see if they do this. This would be pretty cool if this plays out exactly what we're discussing right now. This is not recorded. I didn't pre-plan this, so you guys are aware. I just went, oh, there's two Avis. Hello. So the bid and ask kind of almost resets itself, but I like to clear it every now and then just to make it cleaner. But you don't need to do it because as soon as price retouches it again, it doesn't aggregate. But did that make sense, guys, as to what I was saying? Any questions? I'm just going to pop this in chat. I know a lot of you are supporters, but for anyone who's enjoyed the stream, where you can support the channel. So does that theory make sense, guys? As to, if you were a market making firm, that's what you would be doing. It's kind of not really, that's within the rules. I mean, how can you prove that? But you know that there's going to be stops up there, and you need to get out of your sell. You need to get out of your long positions. So you spend a little bit more to basically take price over, so you can start getting a good exit on your fills. Oh, the links don't post create. If you're in Discord, can you pop it into Discord, buddy? So we'll leave a little theory up here. Be nice if it played out like that. And where is the exact little high of this range? It's 37.5 here. Is it way down as low as that? Wow. NQ's going, so it looks like we're gonna have a stab. But yeah, it's been you guys have been asking some good questions. I would love to spend some time in a market making firm, but I think it's going to be somewhere around what we're discussing, anyways. And they'll have a million different strategies running at one go. It's not going to be what we do, that's for sure. And their positions at one time as well, they'll be carrying positions over as well. So it's not like, if they're down in one day, they're hedged off. They can close that, and then when data points changes, do you know what I mean? They can they can change everything as they go. Whereas majority of day traders are flat at the end of the day, mostly for margin requirements. Yeah, pretty much. But we're looking to see it in the sort of way that we discussed. So 37 and a halves is this high. We want to see the market get up here, bang through it with a stop run above this level, and then basically go up to here, take out these orders, um, and then revert back to point of control. And to be honest, the fact that we're up here, it would make sense if we just take out the high of the actual regular trading hours. To be honest, I mean, I think we're kind of too far away, to get up to the overnight high up here. So I think most likely, if there's, I mean, they could just sell off here and go down here, but just with the amount of buying delta that's come in, I mean, look at this, it's straight line buying right now, and this buying is most likely needs to exit, so they would buy some more and look to get out up here and then sell down here. So we'll see how it plays out. Thanks, Neil. Yeah, I mean, I don't really know. I don't really watch other. I mean, they only try and watch YouTube uh, things for like entertainment and trading. I try to not so it doesn't it doesn't distract me as such. NQ's going down at the minute, so let's see if we can fill out 34s and a halves here, and they do. Oh, this is disappointing. We go back to POC. No. So I have 4 minutes until some volume comes in. We should see the market move. Well, that's true. That's true, TP. Interesting enough, how did everyone find the channel? Zay, I had a terrible day as well. Not as bad as that, but I had a bad day too, buddy. So it happens, man. Just shake it off. And one of the things is, if you normally lose, that is that a big loss or is that an average loss? If it's more than an average loss, then you need to think about how you can repair that moving forward. Because when you end up losing like a couple of weeks worth of gains in one day, um, that's when you need to look at your numbers more. We've all been there, man. Losing days are part of the puzzle, but you need to try and make sure they're not very, they're not, they don't put you back so much. Thanks, Create. Yeah, I think you need to keep it pretty niche, Neil, to be honest. The strategy hopping is the biggest fear. Oh, nice, Abby. So you found it through the DOM and volume profile videos and order flow research. Nice. Very nice. Okay, this is not very exciting. I want us to do something. Someone needs to get a stick and pokey yes. This has been absolutely shocking price action today. Yeah, exactly. It'll be an aggressive day tomorrow. Okay, here we go. Let's see we bang through it now. This is the volume just kicked in. We've got 15 minutes of volume time. Let's see. So we're still already seeing some absorption in the offer. 433 absorbed. But obviously a bit of two-way here. So they need to break this, need to break 36 and a halves. So that's the same again. Now notice if we do bang above here, we should see almost a pop in price if we do, but we're not, if you were looking for this, it's not great that they've just absorbed 730 contracts at one tick. That's an iceberg and a half right there. And NQ is going down. We need NQ to pump up here in order for this to break. Notice there's the 100. Let's see if sellers take it. They're then doing it to prop up the price that little bit more. They're still not done absorbing. Okay, so this is what I was saying before, is they then prop that up. So which they're doing. So they do that to prop. Now you want to see them bang this through here, and you want to see a blip in price. Here we go. Let's see, this is the time where they should be spending the Benjis to just bang it through. So we want to see if they're going to do that. Someone is still happy to absorb here. They've absorbed over 1,000 contracts now. At 37 and a half and 37 here. Well, 37, sorry. They've just taken that full 100 lot. Okay, this should be going now. Right, if we do take this, let's watch for the blip in price. Watch, it should be taking this, and then the offer should be going. So you should see a blip because we're just approaching just above these highs. Couple of ticks above the highs is where people are going to have their stops. We need NQ to go up at the same time. It's not going up, which is not helping. Okay, if NQ will hit the highs here, this should go. So you want to see this little blip. And you want to see them now try and go up and fill out these orders up here, which they're doing. And then you want to see if we revert back to POC. Some amount of buying delta coming in as well. So notice how the price will react when it starts to get up to these orders. Let's see if they're going to take them or if they're going to do the usual tap off it and then revert. Let's see if it gets that far. Wow, they just pulled that at the last second. That's incredible. Okay, look at them planting all these orders up here. Wow. Okay, we could do the same as yesterday. We would fill out these, look at this 302 up here. We would fill out these orders and then reverse. A couple of more ticks till we're breaching the high of the session or the regular trading hour session. No, I like to use the little blip as like a little mini as a stop run. To be honest, that's the way that I identify a little stop run happens and it blips at a high. Look at them planting all these orders as well. So we've got 10 minutes more. So they're probably going to fill out these orders up here and then we'll see if we're going to revert back down into POC. NQ needs to go to help. Okay, all eyes on the 56.5s. Let's see, once they're done here, right? When they're done, the bid will most likely be pulled. There's not really anything trading here as well. You can see how they're just exiting their orders all the way up here. This is craziness. And when they're done, watch the bid be pulled and we'll snap back. This is some amount of buying. That is crazy. Now this is not reverting now. This is crazy. Look at this buying, guys. Take it the market on close data was pretty strong, right? But it's still this. The theory still goes here that once they pull this, right, we're going to revert pretty quickly. See if we're going to fill these out because we've still got algo time that comes out in the next 4 minutes. Yeah, they're not expected to be this aggressive, but this is them basically exiting out their positions here. And sellers are now starting to come in a little bit. Again, the market's doing this. Nothing's really happened apart from some market on closed data, but still. I still think we're going to revert back here. And we'll clear it so you don't need to see all this extra data in the middle. So when they're done, ultimately you just see they'll hit into the bid and bid will be pulled. Watch all these 100 lots print. When they go, you'll notice they'll go because only, not a lot will trade. But yeah, that's a 5-minute candle, that isn't it? Jeez, oh. Tons of absorption now here. Okay, 1 minute till the orders come in. Let's see how they're going to do it. Are they going to pull it back into the range? Or are we just going to moon? There's been more volume in this last 5 minutes than there has for the last 3 hours. This is wild. Okay, 20 seconds. Let's see how quickly we get back in the range. Oh god. Guys, if this is not just unbelievable, what is, you know? That is wild, isn't it? Honestly. Did not expect them to do it as aggressive as that, but they still did it. Go out, fill up all the orders, and then reverse back in. But, geez, oh, did he do it aggressively? Wow. This is wild, man. Honestly, these firms, man, they have a license to literally print money. It's just all fresh air. It's just nothing. Nothing is happening. Nothing in the world happened. Yet they just absolutely smashed the market up. How many ticks is that? How many tickaroos is that? I think I need to start trading this session if they're doing shit like this. 70 ticks from there to there. So they've just moved the market 140 ticks in 10 minutes on nothing. Nothing has really happened at all. Just complete market making, gather the book, bang the market up, spend some money, exit the book, bang the other side. Other people stop out in the way, you know. Crazy. I wish this happened like this every day. I would only trade that 10 minutes of the day and be done with life. If it gave you this kind of price action and I had a rough idea of how they're going to revert back in a balanced day like that, and you could make 70 ticks in 5 minutes, I wouldn't be doing anything else. I would be retired soon. If only it was that simple. It's just complete manipulation, dude, isn't it? Completely, man. Completely. Like stacking of the orders for them to get out, so they can exit their positions so that they start getting the algos to fire in and then they just pull the bid. And see, to be honest with you, The way that the market moves like this, right? I have a conspiracy theory. I reckon the book has been changed. It's been changed, I would say, in the last, since COVID at least, but more so in the last 12 months. And ES is so thin now that they're breaking down orders and everything is so much quicker. And it's almost like, the algorithms are now adapting to the size of the book, and they're doing the same thing, and they know the same patterns that say Citadel and Goldman are working, and then they almost are in collusion with each other. Do you know what I mean? Because you're not telling me these firms there have just are down 70 ticks. It's not happening. And in order for the market to move there has to be no resistance on the way. Do you know what I mean? So the market traded through here. It traded thousands of contracts up here, and it traded like 77 to get through here. There's a conspiracy theory if you want one. It did not kill. It did not kill. No, it didn't. It didn't. It didn't load both sides. Um, but as I said before, my theory about these orders, it doesn't actually matter. It doesn't matter to these firms um, where the market goes. If it went to the downside, they would do the same thing. Do you know what I mean? Like this time, it just went to the upside, and then they just gathered all their orders. They must have been net long. So only plausible solution. They were net long. They bang it up. NQ goes at the same time. There's probably some money coming into the big six stocks as well to help the cause, which is probably the same firm. Um, and then they just get out their orders. So as soon as they start getting out of the long positions where they were long from somewhere around about here, then they get up to their orders up here, exit their positions, and then now they're actually net short and they start hitting into the bid. So just so we're on the same page here, if you're net short, say 2,000 contracts from up here, right? And you need to start aggressively hitting into the bid like 20, 20, 20, 20, 20 all the way down, and you can move a price by 8 contracts like it has here. You're still net long from up here like a bunch, so you don't need to spend as much to bang price down. And then you also have the other firms that are doing the same fucking thing. So they recognize that behavior, they start hitting into the bid and doing the same, and then you're moving the price by for like 50, 60 contracts. So you're net short 2k from up here, and then you're driving price down, and then you need to basically start exiting all the way down. That's why you see this, back and forward pricing. Because you can't just get out your 2000 here or, here or whatever. You need to start layering it all the way down. It's basically getting efficient fills. That's their hardest job. Their hardest job in the market is getting efficient fills. It's the opposite from our end. Our hardest job is trying to determine what they're doing. It's like a game of cat and mouse. What normally happens around when volumes come in, Avi. Now, did you guys find was this a good one? Did you find it beneficial? We covered some points that actually, the reason why I wouldn't have had this context if we weren't in a balanced day. You know, if we were in, a day like this where it was more of a trending day and the profile was bigger, I wouldn't be thinking the same. On days like where it's like this, I expect some sort of those shenanigans. Or if it was days like this where you've got a big trend day, I'm not expecting anything. I don't, you know, I actually just expect the market just to do this up here towards the end. But when it's balanced, you just expect them to basically aggressively take money at the mean, the top of the range or the bottom of the range, and then revert back into where the most money's been spent for the day. And what we did say was we were expecting the market. So I just muted myself. We're expecting the market to finish somewhere like in this rectangle box after hitting the highs. I didn't expect it, to be honest, to happen this aggressively, um, but they still carried out that behavior. I need to start noting this and journaling these streams because if they continually do this behavior, I need to trade this. Um, to be honest with you, because this is they don't do this every day. That's the thing. It's recency bias. I need to start journaling it to see how often they do this behavior, because if they I feel this is more of an edge case with how aggressively they've done this. They don't normally do it as clear cut as this. Yeah, yeah, traded boy. I didn't expect it to do that either, but my god, what a trade! If you there was a key level. There was when we said if you wind back, there was a part. I think it was somewhere about above here where there was like 1,000 contracts. It was absorbed, and we said there's tons been absorbed up here. Once they filled out the levels, they started planting these orders. Notice that those orders are fucking gone now, but they started planting these orders here, right? If we went back to stream, there was about 1,000 contracts or so that I noticed was absorbed, and that was essentially them, getting out of their positions, and then they start hitting aggressively into the bid, and then it just absolutely shit itself all the way back down to here. But check that. You should probably watch that part back because we cover that. I was thinking they were going to fill out these orders a little bit, but at the end of the day, you're going to need to put on some risk if you're expecting it. The risk to reward was pretty good on that position. So have a watch back and let me know your thoughts when you think of it. Yeah, exactly, great. Yeah, it's extremely volatile. I mean, it's not normally like that, to be honest with you. That's wild. Sure thing. Leave a comment and let me know what you guys are thinking. Let me know if you guys have got any other questions before we let to call it. Hopefully tomorrow will be a better day. I know it's definitely not. It's not as aggressive as that normally, man. That's for sure. It does variations of that, but not normally as aggressive as that, to be honest. Yeah, it's not been that common at all, Neil. No problem, guys. I'm glad you enjoyed it. No problem. You guys have a great rest of your day. Hopefully tomorrow is a better day. Um, I would probably be careful as it's GDP coming out. So everyone take care. I'm chilling in the Discord for a while. If anyone needs anything, shoot me a line. But you guys have a great evening. Peace, everyone.